Let me tell you something that most people sitting at home right now don't understand. Not because they're not smart enough to understand it, but because nobody has bothered to sit them down, look them in the eye, and tell them the truth about what is happening in the silver market right now in 2026 at this very moment in history. And I am going to do exactly that today. I don't care if this makes you uncomfortable. I don't care if it challenges everything you think you know about money, about markets, about wealth, because the data is right here. The numbers don't lie. And what these numbers are telling us, if you have the courage to actually listen, is that we are sitting at the beginning of one of the most consequential silver moves in modern financial history. Let's start with where silver is right now. Today, February 27th, 2026, silver is trading at approximately $84 an ounce. Now, for most people watching this, that number might feel like it came out of nowhere. But I've been watching this market. I've been watching the data. And for those of you who've been paying attention, you know that silver ended 2024 at around $30 an ounce. And by the close of 2025, it had surged past $70. We're talking about a gain that exceeded 130 to 147% in a single year. In 2025 alone, silver delivered one of the most dramatic single-year revaluations in modern precious metals history. And yet, and this is the critical point I need you to hear, analysts who study this market for the largest financial institutions on the planet are telling us that the real move is still ahead of us. That silver, even at $84 today, has not yet reached its true price discovery zone. That the forces building beneath this market are not temporary, they are structural, they are permanent, and they are accelerating. So let's go back to basics, because I believe you should always understand the foundation before you can understand the conclusion. Silver has two personalities. It always has. On one hand, silver is money. It has been money for over 5,000 years. Civilizations have risen and fallen on the back of silver. Ancient Turkey mined it around 3000 BCE. Greece used it to fund its empire. Rome used it as currency along the Asian spice routes. And for thousands of years, ordinary people, not just kings, not just governments, ordinary people used physical silver as their savings account, their protection against the uncertainty of the world. That function never went away. It never will. But here's what changed in the modern era, and this is what makes silver in 2026 unlike anything we've ever seen before. Silver is now also the most critical industrial metal in the technological transformation of the global economy. And those two forces, monetary demand and industrial demand, are now pulling in the same direction at the same time, compressing against a supply structure that simply cannot keep up. That convergence is what we call a real silver cycle, and it starts now. Let's talk about the supply side first, because this is the story that almost nobody in mainstream media wants to sit with. The Silver Institute, the definitive authority on global silver supply and demand data, has confirmed that the silver market has now been in a structural deficit for 5 consecutive years, 5 years in a row. From 2021 through 2025, the world has consumed more silver than it has produced. In 2022 alone, that deficit reached a record 272 million ounces, the largest in recorded history. In 2025, despite some moderation in demand due to economic headwinds, the deficit was still a massive 95 million ounces. And the cumulative deficit over those 5 years, the total shortfall between what the world needs and what the mines can provide, has now surpassed 820 million ounces of silver. Think about that number. 820 million ounces of silver that the world needed, but that didn't come from the ground. That silver had to come from somewhere. It came from warehouses. It came from vaults. It came from inventories that are now being drawn down to levels not seen in a generation. And here is the critical reality of mining that the financial press almost never tells you. Mine supply for silver is not responsive to price signals the way other markets are. Why? Because roughly 72% of all silver mined in the world comes as a byproduct of mining gold, copper, lead, and zinc. The miners aren't primarily chasing silver, they're chasing other metals. And when the primary metal economics don't justify a new mine, the silver doesn't come either. In 2025, global mine production was essentially flat at around 813 million ounces. No surge, no response, just flat. And the Silver Institute projects mine supply will remain constrained going into 2026. You cannot fix a 5-year 820 million ounce cumulative deficit with a flat mine supply curve. The math simply does not work. The physical silver is not there. Now let's talk about demand, because this is where the story becomes almost breathtaking in its implications. We used to talk about silver demand primarily in terms of jewelry and photography. That era is long gone. Today, we are living in the age of silver as a foundational technology metal, and the demand drivers are unlike anything this market has faced before. Start with solar energy. The International Energy Agency projects that new solar capacity installed between now and 2030 will account for more than 80% of global renewable energy growth, with solar power becoming the dominant renewable source by 2030. Solar capacity is expected to grow at a compound annual growth rate of 17% through the end of this decade. Every single solar panel uses silver. Silver paste sits on the front and back of each photovoltaic cell, converting sunlight into electricity. Silver is the most electrically conductive element on the periodic table, more conductive than copper, which is why there is no complete substitute for it in high-efficiency solar production. In 2024, photovoltaic demand for silver consumed over a quarter of the entire global annual supply. And even with technological advances that have reduced the amount of silver per individual cell, the explosion in total installations more than compensates. The next generation solar cells, the TOPCon and SHJ technologies that are now entering mass production, actually require more silver per cell than the previous generation. So even as engineers try to reduce silver content, the technology is simultaneously demanding more. Then you have electric vehicles. The global automotive transition to electric is not a trend anymore. It is a mandate. It is a policy directive in the European Union, in China, in the United States, in virtually every major economy on the planet. And electric vehicles are silver intensive in ways that internal combustion engine cars simply are not. Every EV requires between 25 and 50 grams of silver for battery management systems, power electronics, sensor arrays, and charging infrastructure. The Oxford Economics report commissioned by the Silver Institute projected that global automotive silver demand will grow at a compound annual growth rate of 3.4% between 2025 and 2031, and that by 2027, electric vehicles will overtake internal combustion engine vehicles as the primary source of automotive silver demand, accounting for 59% of automotive silver consumption by 2031. Silver demand from EVs alone jumped an estimated 20% in 2025. And as the charging infrastructure builds out, because you can't have EVs without charging stations, and charging stations require silver in their power electronics, the demand multiplier extends even further. This is not speculative. This is physical infrastructure being built right now. And then there's artificial intelligence. This is the newest demand driver and possibly the most powerful one over the coming decade. The report from the Silver Institute notes that total global information technology power capacity grew approximately 53 times between the year 2000 and 2025, from 0.93 gigawatts to nearly 50 gigawatts. Data centers, the physical backbone of every AI system, every cloud computing service, every digital transaction in the modern world, require silver in their high-performance computing infrastructure. Silver's thermal conductivity, its corrosion resistance, its electrical performance under extreme conditions, these properties make it irreplaceable in the data center environment. As AI adoption accelerates into 2026 and beyond, data center construction is not slowing. It is accelerating, and every data center being built demands silver. Goldman Sachs, in its current market analysis, views silver as the primary strategic metal of the green transition, projecting silver to average between $85 and $100 per ounce in 2026. Citigroup has issued a target of $110 for the second half of 2026, citing an acute shortage of physical silver available for immediate industrial delivery. JP Al-Malgren has an average price projection of $81 per ounce for the full year, with an aggressive internal path acknowledging significantly higher potential. BNP Paribas has suggested silver could reach $100 per ounce by end of year. Now let's talk about the monetary side of silver's demand equation, because this is the part that ties everything together. This is the part that turns a silver bull market into a silver cycle. And a cycle is different from a bull market. A cycle is driven by systemic forces. A cycle changes the foundation of wealth. Let me show you what I mean. The U.S. national debt has now surpassed $37.8 trillion. Say that number out loud. $37.8 trillion. The interest payments alone on that debt are now consuming more of the federal budget than military spending. The International Monetary Fund has warned that global public debt to GDP ratios hit 93% in 2023, and they've only continued to rise. The U.S. dollar index declined over 8% in 2025. A falling dollar is not an accident. It is the arithmetic consequence of printing money, of running deficits, of debasing the purchasing power of every dollar that exists. And when a currency is debased, throughout all of human history, people have turned to silver and gold as the monetary alternative, as real money, not paper promises, not digits on a screen, physical metal that no government can print, no central bank can conjure, and no politician can manipulate. Here's something extraordinary that happened in 2025, something that would have been unthinkable a decade ago. For the first time in over 3 decades, aggregate central bank reserves globally held more gold than U.S. Treasuries. Let that sink in. The institutions that are responsible for managing the monetary wealth of nations, they are quietly and systematically reducing their exposure to dollar-denominated paper and moving into hard assets. The People's Bank of China maintained an uninterrupted 15-month gold buying streak through early 2026. The National Bank of Poland added over 80 tons to its reserves in 2025 alone. These are not small speculative purchases. These are strategic realignments. These central banks are sending a signal to the world, and the world would be wise to listen. And when gold moves because of monetary distrust, silver historically moves faster and further. In January 2026, silver futures briefly hit $121 an ounce. It then corrected sharply, down 30% in a single day on January 30th, one of the most violent single-day declines since 1980, triggered by the nomination of a more hawkish Federal Reserve Chair, Kevin Warsh, which temporarily rattled the debasement trade. But notice what happened after that. Silver didn't collapse into oblivion. It stabilized, it found a floor, and today it is trading around $84. That $84 is not the top of this story. That $84 is the base from which the next phase launches. The underlying structural forces, the supply deficit, the industrial demand, the monetary distrust, the dollar weakness, none of those things changed because of one Fed chair nomination. The fundamentals are intact. The cycle continues. Let me give you the full picture of what the analysts and institutions are saying about where this goes from here, because I want you to have the complete data in front of you. TD Securities has set a 2026 high target of $118 per ounce. Bank of America has raised its precious metals outlook dramatically, with some internal projections suggesting dramatically elevated silver prices as a bull case scenario. Citigroup, as mentioned, sees $110 in the second half of 2026. Goldman Sachs projects an $85 to $100 average. One prominent analyst at Gold Silver, Alan Hibbard, stated publicly that he wouldn't be surprised to see silver increase by over $100 per ounce from its 2025 close, potentially reaching $175 or higher. The gold to silver ratio currently sits near 60 to 1 point. Historically, the long-term average is around 47 to 1 point. In ancient Rome, the legal ratio was 12 to 1 point. During the height of the monetary silver era, ratios of 15 and 16 to 1 were common. A reversion toward 50 to 1 from today's gold price around $5,000 would put silver at $100 per ounce. A reversion toward 40 to 1, well within historical norms, during silver's powerful periods would put silver at $125 per ounce. The math of the ratio alone, without a single additional fundamental driver, tells a powerful story about silver's relative undervaluation. Now let's talk about what's actually happening in the physical market, because there's a dimension to this story that goes beyond charts and projections. Something changed in 2025 that we need to understand clearly. Significant amounts of silver, billions of dollars of physical metal were relocated into the United States at the beginning of 2025 as bullion banks stockpiled metal to hedge against potential tariff exposure. Even after it became clear that precious metals were exempt from tariffs, that silver stayed in New York, physically trapped there, because the uncertainty about future tariff policy remained. This physical dislocation created genuine tightness in global silver markets. Lease rates, the cost of borrowing physical silver, spiked sharply. In London, one of the world's most important silver trading hubs, shortages were when you have a metal where the world's industrial users, solar manufacturers, EV producers, electronics companies, data center builders, absolutely cannot afford to run out, and that metal is physically dislocated and unavailable in the market, prices don't just nudge higher, they move in ways that shock people who weren't paying attention. That's what we're watching, and the Silver Institute confirms that supply chain disruptions will continue to shape the market going into 2026. I want you to understand something that I think is profoundly important, something that goes to the heart of why silver matters in ways that go beyond investment returns. We are living through the end of a monetary era. I know that sounds dramatic. I know some of you might want to push back on that, but look at the data. A monetary system built on the promise that governments will manage their debts responsibly, that has been broken. The data from the IMF, from the U.S. Treasury, from central banks around the world tells you that sovereign debt levels are now at a point of mathematical unsustainability. When debt grows faster than the economy can grow, there is no soft exit. There is no clean solution. Historically, the exits from debt crises of this magnitude involve currency debasement, they involve inflation, they involve the gradual and then sudden recognition by ordinary people that the paper in their wallets has been quietly losing its meaning. And historically, across every civilization, in every era, in every culture, when that recognition arrives, people reach for silver, because silver is not a promise. Silver is not a contract. Silver is not a liability of someone else. Silver is a store of value that has survived the fall of empires, the collapse of currencies, the reset of monetary systems, and we appear to be entering that kind of period again. Let me give you the supply picture all the way through to 2030, because I want you to see the trajectory. The Silver Institute's research produced by Oxford Economics confirms that the three demand mega drivers, solar photovoltaics, electric vehicles, and their infrastructure and AI-driven data centers will drive industrial silver demand higher continuously through 2030 and beyond. The IEA projects solar capacity growing at 17% compound annually through 2030. EV demand in automotive silver overtakes combustion engines entirely by 2027. AI infrastructure build-out shows no sign of decelerating, and against all of that demand, mine supply is projected to stay essentially flat. Primary silver mines represent only 28% of global silver output. The rest is byproduct mining, dependent on the economics of gold, copper, lead, and zinc. New silver mines take 10 to 15 years from discovery to production. The pipeline of new primary silver projects is severely limited. There is no cavalry coming on the supply side. The deficit is going to persist. The cumulative shortfall, already past 820 million ounces over 5 years, will continue to grow. And the above-ground stockpiles that have been quietly drawn down to fill that gap are not infinite. At some point, and we may be approaching that point, the physical market reality forces a price adjustment that no paper trade can suppress. So what does this all mean for you sitting at home watching this right now? What does it mean practically? Here is what I can tell you based on the data. Silver is currently in what analysts are calling a price discovery zone. It broke above the 13-year technical resistance level of $50 to $44 per ounce in 2025. That breakout is confirmed. Above that level, there are no major technical resistance zones until the 72 to 88 out range, which silver has already entered and is consolidating within today. The next major zone of potential resistance based on technical and fundamental analysis is in the $100 to $130 range, with some longer-term bullish projections suggesting $160, $175, and even higher depending on how the monetary and industrial forces interact over the coming 12 to 24 months. I'm not here to make you a specific price prediction. The range of analyst targets tells you that the uncertainty is real and the volatility is real. January 30, 2026 proved that a 30% single-day drop in silver futures is not something the faint of heart survive emotionally. But the fundamental analysis, the supply deficit, the structural demand, the monetary backdrop, the dollar weakness, the central bank realignment, all of it points in the same direction. Silver is undervalued relative to the structural forces that are reshaping its market. And the real silver cycle, not a speculative spike, but a genuine multi-year structurally driven cycle, appears to be entering its most powerful phase. I want to leave you with this thought. There are moments in financial history where the data is so clear, where the structural forces are so powerful, where the convergence of monetary distrust and industrial necessity and physical supply reality come together in such a compelling way that looking back later, people say, I wish I had been paying attention. I wish someone had told me. And that's exactly what I'm doing today. The silver market in 2026 is not a rumor. It is not a conspiracy. It is not a chart pattern. It is the inevitable collision of 5 years of supply deficits totaling 820 million ounces, a solar industry growing at 17% annually, an electric vehicle transition that will consume more silver than combustion engines by 2027, an AI infrastructure build-out that demands silver's unique thermal and electrical properties, a global monetary system being quietly abandoned by the very central banks that built it, a U.S. national debt exceeding $37.8 trillion with no credible plan for repayment, and a physical silver market where shortages have already been reported and lease rates have already spiked. All of that is real. All of that is documented. All of that is happening right now, not somewhere in a speculative future, right now in 2026. The question is not whether the silver cycle is real. The data has answered that question. The question is whether you are going to be in a position to understand what's happening as it unfolds, or whether you'll look back years from now and wish someone had sat you down and told you the truth. I just did. What you do with it is up to you. Research metals focus.